Ladies and gentlemen, Greg McCloskey from ForexLive.com. Did you know that despite the fact that Canada was on holiday on Monday, their currency versus the US dollar reached up to a key technical level and found willing sellers against that level? Do you know what it was? Stay tuned and find out. I'm looking at the daily chart in this currency pair, and when you look at the dollar versus Canada, the high price that the market moved up to today was against the 100-day moving average. That 100-day moving average is in the blue line in this chart, and it currently comes in at 1.3398, and the high price yesterday came in at 1.3398. So sellers leaned against that level and have pushed the price a little bit ways to the downside. The price also tested the 38.2% retracement of the move down from this high going back to March 2023. That's a high for the year, to the low for the trading year in 2023. The 38.2 came in just below that 98 level at 1.33858, and you can see we're below both of those levels in trading here today. So what we can say about the dollar versus Canada is tested a key daily moving average, found willing sellers against that moving average. That keeps the sellers in play. Doesn't necessarily mean that they're in charge on this daily chart. What we need to see would probably be a break below this swing area through here, where we had a number of different swing lows going back to these periods right here more recently, and swing high right here, moved immediately and moved above it here. And in trading here last week, the price came down and retested that level after breaking above it. So this 132.98 to 133.20 would need to be broken on the downside. By the way, there's other levels going back in time within this yellow area here that increases that level is important. So the 100-day moving average on the top side, 132.98. Let's call it 133 up to 133.20 on the downside. Currently trading at 133.67. Buyers and sellers are battling it out in between those extremes. Let's take a drill down and take a look at the hourly chart and see what that is telling us. And off the hourly chart, we have the rising 100-hour moving average. It's going to give us a interim look of a bias defining level that, if broken, would increase the bearish bias. If we stay above it, it's going to increase be more bullish. So that 100-hour moving average currently comes in 133.46. We're going to need to move below that level in order to increase the bearish bias. Until then, there may be some sellers against the 100-day moving average, but we're still above the 100-hour moving average, and that keeps the buyers probably still more in control here, with the old caveat of the 100-day moving average in play. So there you have it. A look at the technicals that are driving the dollar versus Canada, even when they're on vacation. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.